Hello there. The last time I spoke to Alistair Cotton from Currencies Direct, he predicted the cable was on its way to hitting 150. But after the sterling had a relatively buoyant week against the euro and the dollar, I've been back to see him to see if he still maintains his bearish view. So let's continue our conversation about the sterling. I read before we came into this interview it's on the way to having its best week against the euro for 4 years. It seems quite strange given the sterling's generally bearish tone recently. Why is that?
Well, yesterday sterling was caught in a bit of a sandwich between Mark Carney, who was speaking to MPs, and then Mario Draghi, who's the head of the ECB. The bearish tone for sterling has been because the euro has been rising very strongly, and Mario Draghi sort of stepped into the market and stopped the appreciation, really, and that's why we've seen such a quick turnaround, and why it's appreciated, why sterling's appreciated so fast against the euro is basically down to fairly vague comments by the European Central Bank chief.
Yeah, I'm wondering what the general trend is with the sterling. Is this a turning point? Has it hit its bottom, or is it still?
Well, I think the economic fundamentals are still negative for sterling. As I've just described, the reason we're here is because of the central bank slightly changing tone, but not by a great deal. We didn't really say that much. So I would say still bearish for sterling overall. Nothing's really changed in an economic sense, unfortunately.
Yeah, well, when we ended the last interview, we were talking about cable, and you were saying that we could be on our way down to 150. Is that a view that you still hold, and over what time frame are you
long term, yes. I mean, I'm talking probably the next 6 to 9 months. It's obviously dependent on UK data still being negative. I think, as you'll see going forward, the Chancellor is going to put pressure on the Bank of England to extend its asset purchase scheme, and I think that indicates to me that the economy is in for a pretty rough ride in 2013.
Yeah, Mark Carney's face has been everywhere over this last week, doing interviews and speaking to MPs.
Yeah.
From what he said, what indication is there of what type of governor he's going to be of the Bank of England?
Well, I think they're playing quite a clever game here. Mark Carney, if you look at his record at the Bank of Canada, is not a particularly dovish central banker, but he's being portrayed in the market and in the media as quite a dovish one. He's talking about nominal GDP targeting and changing the remit of the bank. I think that's a clever move because they want to keep expectations of inflation low without, and they want to try and generate growth. And the best way to do that is change the perception of a bank governor. You don't really need to do anything economically, really. It's just you're trying to manipulate the market, and they're doing a very good job of it at the moment. As I said, if you look at his record, he's quite hawkish on inflation at the Bank of Canada. So where all this sort of growth story is coming from is probably sort of concocted story, and it seems to be working.
Yeah, but do you think he's going to be the sort of governor who's going to introduce more QE?
I think he's going to be the governor that is responsible for withdrawing this QE rather than adding to it, I would say. It probably fall on Mervyn King over the next couple of months if they're going to go along the asset purchase scheme, which I think they probably will in the next couple of months. It'll be an aggressive expansion of that by Mervyn King, and then Carney to be the guy to withdraw that stimulus over the next couple of years.
Let's change tact and look at the euro. The euro's dropped off since it hit that high of 137. What sort of range are you expecting it to move in now? Because obviously we have people like Francois Hollande talking about how overvalued that it's getting.
Yeah, I think 137, as far as we're concerned, is that sort of level where it starts to choke off European exports. So I would say I think Draghi's done a very good job, a very effective job yesterday at bringing that back. I expect it to drift higher again myself. Whether it gets to 137 and we get more intervention in terms of words from the central bank heads, I personally think that 137 is very unlikely to be broken in the near term myself, and I think it's got a floor under it, these sorts of levels, in terms of how low it can go in euro dollar, I should say, really. So I would say, yeah, 137 to 134.50, something like that. And in the absence of any real data today and early next week, it should trade around those sorts of levels, I'd say.
Yeah, I'm just thinking, given what's happened this week in terms of policymakers in the eurozone, and obviously what's happening in Japan, where they're weakening their currency? Do we just have to get used, or continue to get used to the fact that policymakers and politicians will try to talk down their currencies where possible?
Yes, absolutely. And I think it's easier from a trading perspective. 2012 was very difficult to trade currencies because everyone was trying to front run monetary policy. We're going back towards the good old days, so to speak, where it was just talk that was trying to do, rather than all these crazy monetary policy decisions that are going on. So I think that's good for a trading perspective myself. We're definitely moving towards that, and the whole currency war thing is going to be a huge theme for the next couple of years, absolutely certainty. Whether the euro is one of the currencies that is aggressively devalued by that sort of talk, I don't think it will be, which is why it'd probably be a good trade to go short on and long on and short the other currency. And in comparison to the yen and emerging market currencies, it would probably be more one of the stabler ones, one would think.
Well, Alistair remains bearish on the sterling. Stay tuned to Dukascopy TV for more quality interviews, but for now, goodbye.